Welcome. In this video, we're going to use causal to calculate the corporation tax that a company has to pay. So we start off. The company has made for its financial year, it's made £3 million in revenue. The cost of sales is 1.5 million. So the gross profit will be revenue minus the cost of sales, which is 1.5 million. Next, we have the company's expenses. The company has incurred 200,000 in heating and light and power expenses, 150,000 in office and administration expenses. Depreciation is 500,000. So the total expenses will be all of those added together, which gives us 850,000 pounds. Hence, the operating profit will be the gross profit subtracted minus the expenses, which is 650,000. In addition, the finance cost for the company for this year is 50,000 pounds. So that means the net profit before tax will be 600,000 pounds. Next, we look at the calculations for the tax. The profit per accounts is just the net profit before tax, which is 600k, and in order to calculate tax, we need to add back on the depreciation. So the adjusted profits is the profit per accounts plus depreciation, which is 1.1 million pounds. The company does have some capital allowances, which you will be able to take away from the profits, which include the annual writing down of assets at 25%, which in this case is 400,000 pounds. The first year allowance on computer equipment at 100% is 300k for this company. So the total capital allowances are 700,000 pounds. However, in addition, the company has made a factory, and the capital gain on that sale is 300,000 pounds. So the total profit liable to corporation tax is the adjusted profits subtracting minus the capital allowances plus the capital gains, which gives us 700,000 pounds. Now, 6 months of the company's financial year took place basically the company's financial year spans 2 tax years. So we have to split up the profits so that we can apply the correct rate of tax. Now, 6 months of the company's tax year took place in one period and 6 months in another period. So we're going to call it period 0 and period 1. So period 0, the profit liable was the total profit liable times 0.5, because it was 6 months that took place in this period. So that gives 350,000 pounds. And the tax rate for this period was 25%. So the tax liability is going to be the profit liable in period 0 times the tax rate for period 0, which gives us 87.5k. Then period 1, again, it's spans 6 months, so that's half a year. So the profit liable for period 1 is the profit liable for the whole year times 0.5, which is 350k again. But this time the tax rate for period 1 is 30%. So the tax liability for period 1 will be the profit liable for period 1 times the tax rate for period 1, which is 30%. So the total tax liability is 105k. So the total liability for tax will be tax liability for period 1 plus tax liability for period 0, which is 193,000. And then, well, it's actually, if we change the display, we can see the exact thing. Yes, it's 192.5k. And then that means, so that's how much tax the company has to pay for this year, for this financial year. And we can calculate the net profit available for shareholders. It's the profit per account, take away the total liability to tax, which gives us 408,000 pounds.